Reports are in that Tesla stock is currently trading over $286 per share in overseas trading. Now, this could just be the start of a very big rally this week. As you know, Tesla reports earnings this Wednesday in after hours. And I think if you look past all the analyst bullshit, it's a very clear path to what's going to happen next for Tesla. And that could include all-time highs. Now, at the same time, there is one big risk for Tesla, something neither you or I could forecast. We're going to get into all of it here in this video. So go ahead and hit that like button if you are excited for Tesla's earnings and if you are bullish. If you are bullish, if you are bearish, let me know down below in the comment section why, and what do you think is going to be the biggest, most impactful thing said on Tesla's earnings. That's ultimately what's important. What's said, not what's reported. Now, I know what you guys are thinking. What, the revenue numbers don't matter? The EPS numbers don't matter? What the hell am I talking about? Well, the bottom line is the markets are always going to be forward-looking. So yes, the EPS number matters. The revenue number matters, especially if it's good, if it's better than expectations, that's great, but the markets care about what's happening currently in this quarter, what's going to happen next quarter, and if Tesla has any insights to what could happen in 2024. Those are going to be the things that the markets really care about. As far as Tesla's actual earnings numbers, revenue, and EPS, looks almost certainly too low, and Tesla probably going to beat these by a pretty big margin. The average Tesla analyst expects 79 cents of bottom line EPS. This is auto gross margins around 17%, a little bit less than that. And they expect the headline revenue number anywhere from 24 billion to as high as 25 billion. But a vast majority of the analysts and their estimates are around 24.4 to 24.6 billion. So in that range is expected. Anything above 25 billion, that's going to be really good news. Anything under 24 billion, that would be a big negative. Now, obviously, this might be obvious to a lot of people, but Tesla sold a lot more of your Model S and your Model X's in this last quarter. That should help out that top line revenue number. But not only that, the profits should actually look a little bit better this time around, and you could actually see EPS come in north of 90 cents per share. So I'm actually expecting a really big beat across the board for Tesla, but I don't think that is what could send Tesla stock to all-time highs. The things that could send Tesla stock to all-time highs are as followed. Number one, guidance. That's always going to be the most important topic on any earnings report. It doesn't matter if you had a terrible quarter, pitiful quarter. If you guide much better than expectations, markets are going to love that. And that's a reason why a lot of stocks have done well in 2023. A lot of it was based off of last quarter's guidance. So in the markets, there are a lot of stocks that really need to prove that they were not just overestimating their earnings numbers, but maybe that's a topic for later on into this video. With Tesla more specifically, investors want to see Tesla raising that full year guidance. Current guidance for Tesla is 1.8 million vehicles to be delivered in 2023. Tesla is already over 50% of that target right now, and Q4 tends to be a much bigger quarter than Q1 or Q2. So theoretically, you should see 500, 550, even as high as 600,000 deliveries in that Q4 based off of the historical performance between Q2 and Q4. You typically see a 30 to even 40% jump in deliveries. That should mean we should probably get some guidance being raised from Tesla. And that's one thing that could help send Tesla stock to all-time highs. The second thing that could help send Tesla stock to these all-time highs, and this could be over $400, this could be $450 or higher per share. It's the Cybertruck. The Cybertruck is going to be big here because a lot of your bears are not even thinking about the Cybertruck as a possibility in 2023. I'm sure we do get an update on the earnings report. And I know a lot of people say there's going to be a launching event for the Cybertruck. I get it. Yeah, sure. That's true. Elon has said that. But for Elon to throw out, hey, we expect Cybertruck deliveries to start here in the next couple of weeks on the earnings call, I mean, that wouldn't be too far off of reality, given we just got presumably the first Cybertruck that actually rolled off of the assembly line. Presumably, this is a Cybertruck that is ready to be delivered to clients. We have seen over the past couple of weeks, the last month or two now, Cybertrucks have been spotted in multiple different remote climates. And a lot of people have snuck pictures of the Cybertruck in places like the mountains in New Zealand and Alaska and just different remote climates to do some of that final testing. So this will be big for Tesla. As I've explained before, last time Tesla launched a new model, deliveries increased about 80 to 85% in that range. I believe it's 83% year over year. It drew a lot of attention to Tesla when they launched the Model Y March 13th of 2020, and I think the Cybertruck could do that on steroids. And I think the markets would be forward-looking and start to look ahead towards increased demand for Tesla. Third reason I think Tesla stock could soon rally to all-time highs, or at least a very real possibility, is if we get guidance that Elon and Tesla, they don't expect to cut prices anymore, and that margins not only were better than expectations, in which I believe they will be, but will improve in the coming quarters. I think that is something the markets really haven't even priced in for Tesla. And why I say this is because 3 months ago, the EPS estimate for Q2, the current quarter that we're in, was 92 cents. Today, you're sitting at 79 cents. That's the estimate for this quarter that we're being reported on. Now, the current quarter for Q3, the current estimate is 84 cents. 1 month ago, the estimate was 85 cents. So this whole time, during this whole entire rally, estimates for Tesla have fallen. That's why a lot of the bears use that argument that fundamentals are stretched and Tesla stock should sell off based on fundamentals. But in reality, if Tesla beats on this EPS number and the markets can assume that no more price cuts means better margins coming, well, that's going to change the valuation instantly for Tesla. And that is something that is, simply put, not priced into Tesla stock. Now, why do I think margins, auto gross margins more specifically, are going to be better than expectations, and that we should probably expect margins to increase throughout the rest of this year? Well, it's simple. Wall Street's not going to tell you this. The bears, a lot of the bulls aren't going to talk about this. But you gotta watch what Tesla is doing currently. Tesla just gave out the biggest bonuses to employees of the Shanghai Gigafactory that they have seen in quarters. It's been a long time. 3 workers told Reuters that they had received bonuses of 1.5 times of monthly base salary for the second quarter. This was higher than the quarterly bonuses, 1.2 times the monthly salary that the majority of workers used to receive for average performance, the workers said. So these are the biggest bonuses that have ever been given out to the Shanghai workers. Now, let me take you back to what happened on April 18th. One day before we got this margin panic and Tesla's bad earnings last quarter. That was on April 19th. You got the Q1 earnings. On April 18th, they cut bonuses massively to about 0.7 times monthly pay. These bonuses are double what they were for Q1. At least from the couple employees that have actually reported on this. Now, there's strict procedures you have to go through as a Tesla employee. If you receive these bonuses, you're not supposed to talk about it. So this is not news that was supposed to get out. Keep that in mind. And I think this is, if there is one thing that you take out of this video, it is this. This is a clear sign that margins are going to be better than expectations. A company with falling margins and potentially could have massive pressure put on their stock, which is Tesla. There could be a lot of shorts that pummel Tesla if we were to miss margins massively. A company like Tesla with a CEO such as Elon does not give out these massive bonuses to their employees and hurt their margins further. Margins must have improved and likely to continue to improve. And this is something that I think a lot of Wall Street missed, and I don't want you to miss this because this could be a massive clue and potentially lead to a massive opportunity in Tesla stock over the next coming weeks. Now, a reason why I believe Tesla stock is ripping in overseas trading and is hitting new highs of this cycle, it's likely to have a very strong day tomorrow, probably a very strong day on Tuesday. Well, it's probably this. Tesla hits the ABS market in first sale since blue chip upgrade. Now, we talked about this in the video earlier today, but I want to briefly go over it in context to earnings because there's a lot of people out there that were looking at Tesla's balance sheet and looking at the expansion that Tesla is planning to do, multiple factories at the same time. These things take capital. Yeah, sure, Tesla makes billions of dollars a quarter, but if you start spending a lot of money out of your earnings, you start to really hit your margins even more. Forget price cuts. If Tesla starts building 2 gigafactories at once, that's going to have a equally, if not larger, effect on Tesla's margins, right? If Tesla's cutting prices or not, this would be much bigger. So that has quite a few people worried about Tesla potentially selling stock and raising capital. Even Meet Kevin, I'm sure you guys know who Meet Kevin is. He said that at some point soon, Tesla's going to have to sell stock. Well, I don't think anyone expected this poker move from Elon. The ABS is the asset-backed securities market. Now, this is kind of like a collateral loan, right? If you had a bunch of houses, call it that. This is pretty comparable to what Tesla did. You got a bunch of houses, right? This pays you, call it 10%. Well, you can go to a bank and you could get, call it $1 million loan, and they're going to charge you 5%. Just making numbers up here. You're still going to make money off of that, just, conversion, right? You're making 10%, you're paying out 5%. You're still going to make money, but you get a lot of capital up front. That's what Tesla just did for $1 billion using prime auto lease transactions. And this was really with your high quality borrowers. And Tesla has not been in this market since September of 2021. They tried to do a sale of these asset-backed securities back in March of 2022, but they stopped because the markets were going to shit. They stopped because the war in Ukraine and the uncertainty. Not a lot of people wanted to go out and buy these asset-backed securities. There was not a lot of demand for assets such as these. Well, Tesla is going out and doing just that, likely meaning we're not going to see any dilution to shareholders for quite a while now. Now, we have also gotten speculation recently from analysts that Tesla is probably going to create its own financing branch. Just like Tesla has insurance, probably here soon, which it wouldn't surprise me if this is announced on Tesla's earnings call on Wednesday, Tesla could create a separate kind of entity within Tesla to finance their vehicles. These are obviously the high quality borrowers. These are people that, are not going to have such a high default rate as even like credit cards, such of that nature. And this could increase sales to Tesla because they could do this all in-house, probably offer some better rates. And this, I think, could be another big catalyst. Now, these are all things that I expect to be bullish on Tesla's earnings. The bearish, and really the only bearish that I foresee from Tesla's earnings, connecting the dots here. That's what I'm good at. I'm good at psychology. I'm good at seeing signs and putting them into kind of something we can extrapolate and make a conclusion from. That's why we were spot on the deliveries. That's why we called the bottom when Tesla was $100 per share. These things are easy to see when you're looking at psychology and connecting dots here. And I think this time around is even easier to forecast Tesla's good earnings and the good things that I've mentioned here in this video. It seems very easy. Now, the one thing that I cannot calculate and come to a psych reading on, essentially, is Elon. I don't know if Elon's going to come out and talk negatively about the economy, talk negatively about the consumer. Student loan repayments are coming. Does Elon say that could crush Tesla, or that there's a possibility of that? That is the thing that I think could cause Tesla stock to fall. Now, in conjunction with a lot of positives, it might not be such a negative. But that's the one thing I can't quantify. I don't know how Elon is going to be, how he's going to feel on July 19th and after hours, this upcoming Wednesday. That's the biggest problem and concern that I have as of right now. It's not auto gross margins missing. I don't think that's going to happen. It's not a lowering of guidance. It's none of that. It's, as Elon say something the markets do not like. That's the biggest concern. And I'm willing to take the bet that he's probably not going to do that. In conjunction with all of these positive things that I expect from Tesla's earnings, you are seeing the highest short position in Tesla that you have seen in 2 years. I don't think this ends quietly. I think there will be a big blow off top move and then a slow and steady rally higher. That's typically what happens with Tesla. Sometimes you get a blow off top rally and you continue to see a blow off top rally. That's also a possibility. Or again, Elon could have a bad day and he could make Tesla stock fall. That's always a possibility as well. But currently, the dollar amount that's sold short in Tesla stock is $26.63 billion. This is up 60% in the last 3 months. Short sellers shorted Tesla at 120 to 150. They're massively down on their short positions. The average short is down over 100%. That's a bad situation to be in if you are a short seller. Now, you're currently sitting on about 96.5 million shares that are also sold short. Again, that's the highest number that you have seen in the last 2 years. That's a big problem for the shorts, considering every dollar higher for Tesla stock is costing the shorts over $100 million worth of losses. Not to mention just that, the option activity has been exceptionally bullish with strikes such as the 280 call, 285 call, 290 call, 295 call, and the $300 call, the 315 call, and the 350 call expiring next week. Seen a lot of option activity last week. A lot of people went out and bought those options. So if Tesla stock does start to break above 300, that's probably going to give you a much bigger move higher. Now, the initial reaction after Tesla's earnings is probably going to be on those margins, right? Those algorithms, they're going to be the first ones to react as soon as the earnings numbers come out. So don't be fooled when earnings come out if Tesla does fall 1 or 2% off of the initial reaction, if for whatever reasons, margins did not come out as expectations. Again, I want to highlight this. The margins last quarter, the revenue last quarter, that does not matter. Out of 100%, that matters like 5%. What matters more is the commentary, the report that comes out alongside Tesla's numbers, which will be pretty instantaneously as well, on where do they expect margins to go. That is what you probably get that initial big reaction off of. And then after that, it's going to be the guidance call, which will be about 30 minutes after numbers are released at 4 p.m. So if things play out as I expect they will, Tesla stock could easily make its way to $400 per share, if not all-time highs. Again, I want to bring you guys back to what I said earlier. If margins do come in better than expectations and estimates need to go higher, that instantly takes down things such as the PE ratio. That makes Tesla stock instantly cheaper. So theoretically, if your EPS comes in much better than expectations and it looks like margins are going to continue to improve in 2023, well, you could see Tesla stock, call it 330, with the same valuation as you are seeing today. Because the valuation just got a lot cheaper, but Tesla stock just went higher. So you could actually see the same multiple on Tesla at 281 as you would see the same multiple on Tesla at, call it, $330, if the EPS beats to a large margin, in which I expect over 90 cents of earnings per share. And I think just on top of that, that's where you start to get into squeeze territory. That's where the gamma squeeze really starts to play into Tesla's favor. Now, it's not just Tesla. You're going to have other earnings as well that I think we should talk about, and the risk to the markets, and that could ultimately affect Tesla stock. So the two risks here in the markets is a recession, but really what is going to give the markets fear about a recession before a recession actually just pops up, if we get a recession in the first place, is bad economic data. So that's really what you want to watch. But at the same time, the markets are not exactly cheap. So earnings will also be important from your big tech players. There's a lot of good things baked into earnings, with multiples being as high as they are on stocks like Apple or Microsoft that are 2 to 3 times more expensive than Tesla on a PEG ratio basis. There's a lot of good news baked into some of those names. Now, good thing is we're not going to have those names reporting earnings this week, but that could be a story for next week. Now, the economic data probably going to be pretty big as well this week. Monday, you're not expecting any big data. Tuesday, retail sales for June. That's coming out at 8:30 in the morning Eastern Standard Time. You're expecting 0.4% of an increase, so you're expecting a boost from last month's reading. On top of that, you're going to get industrial production, manufacturing production, capacity utilization, business inventories, a lot of second-tier data that can also be important, again, with the recession narrative. You want to watch, does the data support we're heading to a recession, or does the data support we're even heading into an expansion? That's what's key. 8:30 in the morning on Wednesday, building permits for June, expecting 1.5 million. Last month's rating was about 1.5 million. I don't expect that to be a big deal whatsoever. Now, for Thursday, you get some Philly Fed data. You get the Japan inflation rate. That could actually be pretty big for us, because if you start to see inflation go up in Japan, you might start to see an end to their historic bond buying purchases, and that could cause their rates to go higher, and that could definitely mess with the dollar, and that can mess with our bond markets as well. But that's really going to do it for this week as far as big economic data is concerned. It looks like Tuesday is going to be that big day with retail sales. The story with earnings this week is also very interesting. Monday and Tuesday mainly going to be dominated by bank earnings. Even Wednesday and pre-market, mostly bank earnings. Now, Wednesday and after hours, as you know, Tesla, Netflix, IBM, Las Vegas Sands, Discover, these are names that can have big impacts to their sectors. Discover, watch the credit cards. Watch anything with a lot of consumer debt. Las Vegas Sands, travel, leisure, hospitality, IBM, some of your chips, right? Some of that consumer demand for IBM products, which is really a whole spectrum of different sectors put together. Netflix, obviously streaming. Tesla, obviously auto. So Wednesday has big implications for actually the rest of earnings season. Now, Thursday pre-market, TSMC, American Airlines, Johnson & Johnson. Thursday after hours, Intuitive Surgical, Capital One, PPG, Berkeley, and that's about it. Friday pre-market, American Express, and that's really it. So I think next week is going to be a much bigger week as far as earnings. This is actually a positive that Tesla reports earnings this week, which they normally do report before your big tech names, meaning that if Tesla has good earnings, there's probably not another earnings here that is going to sour the markets enough to cause a sell-off, which would also sour a potential rally in Tesla. Hopefully that makes sense. If it does not, then consider coming and trading with us. Every time I make a trade, I send out an alert. This is not a texting community. This is something that you can actually come to and talk to me, and we can work through any problems that you're having. If you have any questions, even on real estate, things of that nature, I'm a licensed real estate agent here in Michigan. You can come ask me some questions. We can try to better everyone's situation. That's the ultimate goal of that, and help people grow their knowledge base. Because knowledge, I mean, you can hit a play once, but knowledge lasts forever and will continue to help you make money, guys. So that is going to do it. Link down below in the description of this video if you guys want to be a part of it. Hit the subscribe button as well as the like button if you like my perspective and you resonate maybe with some of this information. If not, just let me know if you disagree or agree down below in the comment section. You guys enjoy the rest of your day, and I will see you in the next one.